Hello, everyone. Thank you very much for joining us, and just wanted to make sure this is the why platforms are the key to dominating venture capital and investments in fintech panel, just to make sure you're in the right place. And so, I can't picture a better group of people to speak about this. So my name is Marvin, and I will be moderating this panel. And so what love to do is I love to have my panelists introduce themselves, illustrious panelists. Alex is going to be representing and speaking really from the LP side, and Eli really from the fintech and VC side. So, Alex, would love to have your quick intro of who you are and what you do, and then followed by Eli, and then we'll jump right into it because you only got 21 minutes.
Thank you so much, Marvin. Really happy to be speaking, and a big fan of yours and Eli. So this could be more exciting for me. So I run a fund of fund called TI Platform. I manage that, and we want back folks like Eli, amazing entrepreneurs that are building next generation platforms, studios, in disruptive models for venture. And then in my past, I've also founded kind of a LinkedIn for LPs called TI Platform, called Trusted Insight, amongst other things. So thank you for having me.
Yeah, great. And how about Eli? Please introduce yourself.
Hey there, Marvin. Thanks for the warm intro. So, and for folks who saw me earlier, it's good to see you again. Good to see new faces. So I'm Eli Broverman. I've worked in fintech as an entrepreneur and now investor for a long time. I started a company called Betterment, which many of you might know, back in the late 2000s. And we took the long, slow path to building that company. It was at a time when fintech was, hardly recognized as an interesting space within tech. But we thought there was a lot of change that was due to happen in financial services. And we went about it by building a lot of our own technology and owning a lot of our own regulatory infrastructure. It took us time, and it was just an unusual path at that point in history. But today, Betterment's a thriving company that manages $25 billion for over 500,000 customers. And now it launched Treasury along with my other founder and builder partners from the fintech space, Jeff Cruttenden from Acorns, John Crisadoro, James Layfield. And we are bringing together a global community of our fellow fintech founders to help them build their own businesses and also to invest in them.
Yeah. So basically a new VC fund with a platform, right? Net Treasury. Yeah. One of the things we should probably talk about, so maybe what we'll do is we'll talk about sort of like big picture in general, and then we'll sort of go into sort of like fintech particularly. Alex, you are one of the best LPs, around, right? We know that for a fact. You invest in amazing sort of like VC funds. And so you've been in the game for a long time, just like me, as a former VC. A lot of stuff has changed. And so, maybe before we get started, like, how would you define platform, right? Like, sort of, I think there's a two-part question. How would you define platform? And then sort of like, what is happening in the VC space where why this is actually becoming important?
So that's a really, really good question. And thank you for your kind words. This is a really, really humbling business, but we like to buy back the crazy ideas, or many crazy ideas end up becoming the mainstream. So, and platforms are similar to that. So, there are many definitions of platforms, but I think in my estimation, a platform is something that A, provides connectivity, and B, provides services at scale. Right, okay. And that's the key differentiation, providing network effects and versus brand effects, and then providing services at scales. So rather than giving a theoretical example, it's just it's a YouTube versus an HBO. It's a Amazon versus a Tiffany's.
Okay.
So that's the thing. And the reason why platforms are so important for venture capital is that platforms are ideally suited for power law. As all of you know, venture is a power law game. where a small number of investments, a small number of outcomes make up for the vast majority of the returns of the industry. And a platform is built to take advantage of those asymmetric returns. Very, very, very good examples like this, of course, you've seen YC in platforms. Today, it's unthinkable, but today, 30% of all Series A's done in US are YC companies. And then when you see it, well, YC only does an interview, a 10-minute interview. How can they determine whether a startup is good in a 10-minute interview? Right? It's literally a 10-minute. They're actually doing interviews, and one of our companies that was incubated by some of the founders that we were lucky to back and got into YC, and they make the decision the same day after a 10-minute interview. So that's kind of an example of a platform, and we're seeing that now in SaaS with say like SaaStr. We're seeing that in developer-facing tools with Heavybit, and we're so lucky to be partners with Eli in Fintech. And I think Fintech, because Fintech is based on connectivity, right? Fintech more than any other industry is based on connectivity. So I think Fintech is probably the most, kind of the best place to build a platform.
Okay, and I think one of the things I'll just add, just also give people some context of just, if you know it at the generalist level, first round capital has been known at the generalist level of having platforms. So whether it's recruitment services or CTO services, whatever it is, or bringing the community together, Andreessen Horowitz with their sort of massive team on the platform side of BD and sales, marketing, PR help. These are more generalist examples, I would say. And so I think maybe that's actually a great sort of like crossover to sort of like Eli, of just sort of like, what are you trying to do at Treasury, and why does this make sense right now in Fintech, right? Like, and why hasn't anyone done this right now in Fintech? Just love your perspective.
Yeah. Okay. So I think what you just said at the end is the starting point, right? Is like, nobody else had done what we're trying to do, which is, from the founder's perspective, build a fund that wants to bring together all of the other founders who we know and respect, and back the ones that we think we have a real opportunity to impact the outcomes for. We took a look around and nobody really was doing it, and it was an obvious opportunity. But to me, it's sort of this journey started with, well, we were a bunch of actually experienced entrepreneurs who knew how to build fintech companies and got asked all the time to help lend some expertise because it's such a specialized space. And we started thinking, well, that's useful, and I think we're adding value to companies who are asking for our advice. But we should figure out a way to scale this, because there's only so many conversations I can have with a fintech founder every week. There's only, I can only pass knowledge one-to-one so quickly. So we need to figure out a way to globalize this. That's what it's about for us. Like, we start with, how do we add value to the other fintech founders and their teams who are looking to build something great? And some of the ways that we do that, I think, are one, helping them with many of the very specialized to fintech issues in regulatory, helping them think about onboarding, which is so particular in fintech, and helping them think about partners and vendors, maybe on the back end, maybe on the front end, because you get to know the landscape and you see the pattern recognition. You know who's difficult to work with, who can actually develop something. That's great value on a one-to-one level. But if you actually take time to build process around that, then you can add scale, and people want to come join your community and contribute to it. On the backside of that, as an investor, it's an incredible data set. And I just don't think, you're in a great position to intelligently invest in a space if you don't understand the space really well, all of the technical sides of it, and also understand the market landscape. And the platform gives us a data set and gives us a view of the market landscape, so we know who's died on this hill before, who's never tried this before. Why is this team different from the last team that failed? Is this a good opportunity that has legs, or is this something that's never going to work?
Okay. Actually, this is a question I'll throw out to both of you. Why do you think all of a sudden, like, particularly for fintech, like this is a timing question. So Alex, Eli, why do you think now is like, like I said, the big question is like why nobody's really done this before? But assuming sort of like, now that Treasury is doing this, why, like I'm curious of sort of like from a timeline of trends perspective of just like what is your perspective for either one of your perspectives on why sort of like the timing is like right for something like this right now, and why there's a need for something like this right now at a macro level.
So I'll start, and I'll try to keep it brief, but I think cyclically, we're at a point where we've had the first 10 years of fintech, really. I mean, of course, like, there's sort of the pre-dawn days where a lot of amazing companies like PayPal were built. But the real golden age of fintech, we think, has been the last 10 years, but I think that's really the first era. And, what we've seen is, fintech companies have taken what looks like a lot of market share, but it's really like kind of 5%, maybe to 10% of the world's financial services and market share. It's been a proof point. We've had a lot of unicorn companies built, but the next decade, this is the real golden age of fintech that's coming, where we're going to see decacorns, some of the world's great giant institutions being built in a tech-first, customer-first standpoint, the way that a lot of fintech companies think about building, and they're going to, they're really going to be the dominant companies of our era.
Okay, cool. And Alex, I would love to get your take, right? Because you see, you look at this from a very different perspective, as
well, I agree with everything that Eli has said, right? In everything, I mean, the largest private company in the U.S. is Stripe. The largest private company in India is Paytm. The largest private company in I think is Nubank, and the list goes on, right? In everything. And also, I think for once, it's not just fintech companies are going to take over. Fintech is just becoming financial services are going to be offered as a service. So that's the beauty of it. The version one of all those things, the version one of cloud and cloud infrastructure was, things like Twilio got built and things like Stripe. But now the next banking infrastructure and insurance infrastructure is going to be built as a service. That's the beauty. So anybody with a great user experience, great NPS can offer those services. That's number one. The second thing is, and this goes back to our question of platforms, is that you are now going to see, there's been a lot of activities, and it started with, in the 90s. That's why the super angels came into being with cloud infrastructure, allowing democratization of startup activity. Now, with low code, no code, you're going to see an even bigger explosion. So low code, no code, APIs, that's going to allow more and more people to go into spaces that they would never be able to do. And we're so lucky to partner with Eli and Jeff and the team at Treasury, because they are best suited to take advantage of this. They know the regulatory potholes. They know the minefields. In fintech, as there are more minefields than potholes, because they can literally blow a company up. And so that's why there's going to be more noise, more startups in this space, and more non-fintech companies. You're seeing Amazon getting into insurance. You're seeing Google getting into banking. And those things will accelerate.
It is interesting, where I think about also another reason why platforms potentially could be really interesting right now, because you have so many super experienced, like money right now, as we all know, is a commodity, right? Like you can get money, like if you want to raise money, the top founders are like, what are you going to do for me? What are the things that you're going to be able to do? Why should I take your money? And I would love your thoughts. So like, providing the platform, the community, these additional services and things, and really that insight is going to be like, wow, like you're going to be the value add for me, like truly, right? Like, let's be frank, most VCs, most investors are not value add. And I think this is potentially another way to sort of like differentiate, and actually like, as if money is a commodity, of just like, this is another reason to be picked, right, by the entrepreneur and by the founder. And I'm curious what your thoughts there.
Yeah, I mean, I think, we could name a list of 15 things, right? But I think it's important to focus on a few areas where you can, where you see the biggest impact can be made for a set of companies. And the places that we tend to focus are one, on thinking through the regulatory structure. It's so important, right, to own the right. You want to, when you build a fintech company, and probably any company that's regulated, right, you want to own the pieces of the regulatory stack that will give you a competitive advantage. You don't want to own the ones that are going to be overhead and commoditized that you can rent without competitive advantage. But it can be hard to figure that out, right? And I see a lot of times where it seems tempting to rent a license. But if you have the pattern recognition, then sometimes you see, well, at the end of the day, you're not going to be driving your product development the way you want to. And I just had a conversation yesterday with a company that's built out a whole banking side of its business, but not by owning its banking core, but by partnering. And now the conversation is, this hasn't worked the way we wanted it to work. We're not in control of our product roadmap. So that's a big area. I think, again, focusing on onboarding, because it's so particular, and you can just shortcut the process. Like it's not magic, right? But knowing the right players, right, knowing the right domain experts to put those pieces in place. There is a certain process in fintech that works really well, so we like to focus there as well. And then I think those are the big ones for us.
Okay. And how about community? I'm curious. Your thoughts on community?
Well, yeah. So, I'll let Alex chime in. But I guess what I'd say there is fintech begets fintech is something we say a lot at Treasury. Fintechs have to be cooperative with each other. Of course, you have your head-on competitors, but a lot of the times you're working with other fintech companies, and your success is their success. When Plaid started, massive exit this year. They first came to some of the other fintech companies and said, we think we can speed up your customer verification, your security, your onboarding, and the first two companies really that they worked with at some scale were Betterment and Acorns. And as Plaid improved their product, my company grew faster. And as my company grew faster, Plaid grew faster. And there's just so many different constituents who actually can help each other in this space. And it's different than, say, e-commerce.
Yeah. Okay. Cool. And Alex, your thoughts quickly?
I think community is the big differentiator, right? So I think you're seeing that again and again. And I think as we go forward, that's going to become even more and more important. So as software becomes easier and easier to develop, the community is going to be the huge differentiator. So, and communities build by trust, and they build, as Eli built his first company, they build slowly. You can't have a, especially in fintech. I mean, you can't build the trust that a Goldman Sachs has built overnight.
Yeah. Yeah, no, that's a great point. I think we have 2 minutes left, so I'm going to leave. I think it's a question a lot of people ask. Fintech is a large area, right? And so, what are the sectors that you like and the sectors you don't like? Just in case there's founders out there and other investors, are there any specific areas that you think are particularly interesting as you're looking at as an investor?
I'll give you three quickly. I think one is serving large but niche seeming markets. We see this maybe more in the States than elsewhere, right? But in the early days of fintech, you had to go broad. There weren't good ways to target subsectors, and you needed more you needed more brand awareness. We've seen such a change in the last 5 years of how companies build brand awareness, build perceived brand awareness. Target customers. Online advertising has evolved so much, and so now I think because it's faster and cheaper to build a fintech company, and you have ways to effectively target and reach a certain niche set. I think that is a very compelling area. I think fintech as a service, as Alex said, right, and being able to embed financial services in other business-facing or consumer offerings is obviously fascinating. Yep. And lastly, listen, anything cross-border in finance is still a nightmare.
Oh my God, a nightmare.
It's for as much as the world has changed And when you're trying to deal with something across a border and it has to do with either money or self-service, it's a disaster. So I think we have a long way to go there.
I can definitely attest to that for sure. And Alex, some of your thoughts.
No, I agree with Eli. I defer. That's why we work with Treasury. And
That's a great
Eli,
question. That's a great answer. That's a great answer.
Yeah, they know. Sorry.
If only my family would start, their comments with "I agree with Eli" more often.
But that's right. You're the LP, right? You back the guy on the sort of like on the field, right? Like, and they're the ones who get to see all this stuff. Totally makes sense. Yeah. So
they educate us. They educate us. I mean, they have these really amazing insights about onboarding, and onboarding is so important, right? You get the user experience, right? There might be a lot in that, and you've seen that with Lemonade, right? Lemonade started with, I just bought, you can buy home insurance with Lemonade, and it's like, yeah, you don't have to wait three weeks. You can get the policy in 2 minutes. Well, that user experience is so good. And say, yeah, you can apply it to life insurance, you can apply it to others. So I think it's just once you onboard the client, once you can do the KYC, you can connect with their bank account, you can use all the different tools. So yeah, I don't think we need to be dogmatic. I think there'll be winners in so many different different sectors. Yeah.
So basically the net is like the future is fintech, right? The future is fintech. It's super exciting. What a great time to be around. And so, I think we have to wrap up, but Eli, Alex, thank you so much for a short but very insightful conversation. At least for me, I learned a lot. This conversation. Thank you. And to the audience, thank you very much for joining us. And we wish you all a good rest of the festival, the FinTech Festival. And we'll be seeing you guys around. Thank you so much. And have a good rest of the day.
Thank you, Marvin. Thank you, everyone.
Thank you, guys.
Thank you. Take care.
All right.